Hello, it's Robert Miner with Dynamic Traders Group with our part two of our DT Major Trends and Reversals update. I do these updates about every 4 to 6 weeks or so and try to time them around a period of time when it looks like we have some interesting potential reversals and trend continuations, which I think we do right around this 2 week period. So this part two of this major trends report is going to be on gold, silver, GDX, the euro, dollar, crude, and beans. And of course, there's the printed PDF file that's the summary of what we're going to talk about here today in the video. And of course, the regular DT reports will keep you updated on the immediate reversal and trend continuation signals and follow up on everything we're going to talk about here. So check out our reports. And if you're not a subscriber, we've got a special deal. I only about once or twice a year do some kind of, I never do a discounted deal, but add a bonus month or some kind of bonus feature to our DT reports if you're not a subscriber through this Sunday. If you subscribe, you'll get 4 months for the price of 3. So if you're interested in following up on any of the markets that we talk about here, check out one of our DT reports, or futures report, or stock ETF report, our trade alerts. And given the amount of material and updates that you get and video trade tutorials and video updates every week, boy, it's really a steal deal for, depending on which report you get, less than $100 for 3 months. That's not 1 month, that's 3 months. So check it out at dynamictraders.com and click on the DT Reports tab. Okay, let's get started and take a look at the precious metals. Well, this is the gold monthly data. And whenever I'm looking at a chart of whatever the time period is, I try and look at it and say, what are some key factors here that identify if we're in a trend or a counter trend, and if we got a ways to go in that trend or counter trend, that sort of thing. So I'm going to talk about a couple key factors on this monthly chart that probably relate to the long-term position of gold. And that is when we completed this 5-wave decline into the December 2015 low, is that if the market was making a correction to that 5-wave decline, it should terminate around the 38 to 62% time retracement. That's real typical of a 5-wave trend regardless of the time frame. And the 38 to 62% time retracement is July 2017 into August of last year, 2018. And we did make a nice clean 3-section what we'd call a flat, potentially flat ABC into the April 2018 double top, which is right in the middle, a little bit beyond the middle of the 38 to 62% time retracement. So right in that time to when, if we're making a correction, the correction would likely terminate. And then we had a fairly substantial decline for several months, and then we've been up for a few months. But more than likely, because this is a well-defined 3 sections, and because it made a top in the 38 to 62% time retracement, more than likely that has completed a correction against this 5-wave decline. Now, a year or so ago, for those of you who might have been subscribers back then, you know that I was anticipating that at the least this would be an A, B, and the wave C would probably reach around the 50% retracement. Well, boy, it just never really got beyond the July high. So more than likely, this correction is complete. However, at the least, we could say, or maybe we should say at the best, if it's not complete, this is definitely a corrective pattern. It's not an impulsive pattern. And that would indicate that even if gold were to make a new high, it would not be a significant new high in an impulsive bull trend, more than likely at least. And that the new high would ideally probably end not too far above the last 2018 April high, around 1412. That's the 100% alternate price projection of this last swing up. And at the maximum, it might reach around 50% retracement. That's overlapped by the 100% alternate price projection of this first advance from the first decline. And it's also the 100% if we take this greater swing up, 100% of that from the August low would be just above 50%. But more than likely, a typical pattern, and what this might be an A, B, C, D, E, if it does make a new high, would terminate around 1412. So not that far above the market. Now, that doesn't mean there's not going to be some great trade setups in gold, uh, multi-week and even multi-month setups. But as far as anticipating, some great advance, a big impulsive trend to new highs, that's probably not going to happen. But what we want to do is really focus on those multi-week trends, because if it should morph into a much higher time frame trend, we'll be on the right side of the market. But so that's my look at outlook for the longer term, much longer term, is that more than likely we don't have a lot to go on the upside, even if we take out the April high. As far as anyway, not any big impulsive trend that's going to make challenge the September 2011 highs or exceed it. It'll still all be part of a correction coming off of the December 2015 low. Well, let's see where we're at right away and if we got any trade opportunities in the weeks ahead. Well, this is the weekly data. So the first thing I always go look at is one, where's the momentums at? And the gold weekly momentums, well, I'm recording this on Thursday, February 14th, just around the close of trading of the day. But we're going to make a bear reversal, dual look back bear reversal on the weekly momentums. It'll be like a double top bear reversal, basically. And it'll be on a price momentum bearish divergence, meaning we had a new price high just before we made this latest bear reversal. But the momentum high is lower than the prior momentum high. So what this does, at the very least, it warns us that we're at or near a weekly high. And should gold continue higher and take out that early February high, the upside should be very limited if that should happen. And more than likely, we've completed that weekly high, and we're going to be sideways to down for several weeks. Now, let's keep in mind that these last two weekly declines were just 3 and 4 weeks each, so they weren't major declines, and 3 and 4 weeks each they were corrections, and the weekly momentum, the 8 at least, did not reach the oversold zone. They made their bullish reversals right around the mid zone. So we're not necessarily going to have even if we've completed this weekly high as anticipated, a serious decline, but we've only been 2 weeks sideways to down since the early February high, but we should have at least another couple of weeks sideways to down before we complete a weekly low. So we should be sideways to down for a couple weeks. Let's take a look at the daily data, because that gives us even some more information. And here is our daily data coming into the January 31st high. And I've had different wave counts on here over the last few weeks, depending on how these swings are being made and that sort of thing. Well, right now, coming up from the November low, this is a pretty clean count. And that's a 1, 2, and a 1, 2, 3, 4, 5. So we completed a wave 3. That would indicate we're going to complete a wave 4. And typically the wave 4 would reach into the zone of the wave 4 of lesser degree, and that would be below 1300, and the 38.2% to 50% price retracement of wave 3 is a typical retracement target for wave 4 that surrounds the extreme of the wave 4 a lesser degree. But that also means that if we complete this wave 4 correction, we'll make a new high before the much higher time frame, let's call it multi-month trend, is complete. So we want to be aware of that. So where are we at immediately over the next couple of weeks is the daily momentums have already made a bull reversal. So we're probably pretty near at least a daily low where it'll be sideways to up for several days. But given the weekly momentums are dual look back bear, it should be a correction. And regardless of whether it's a correction or we make a new high, the next daily momentum bear reversal, that's going to have the daily and the weekly momentums in sync on the bear side to continue the decline. And we'll decide on where the price is when we make that daily momentum bear reversal to identify how significant or what degree that decline will be. And I suspect more than likely we're going to make a bear reversal without having taken out the January high. It'll continue for another couple of weeks, a week or two anyway, to complete this wave 4 correction and a weekly low. So we'll keep you up to date on that. But at the very least, what we're looking at is even if the gold makes a new high on this daily potential daily bull trend coming up, the upside is probably pretty limited before we confirm that a weekly high, and in this case it'll be a wave 5 high, is complete. And that'll be a fairly significant high when it is complete. The other reason I anticipate that more than likely we'll be sideways to down for another week or two, and that this is a wave 4 correction, is there's some significant time factors into March, kind of the middle to the latter part of March, of when would be a more definitive time to complete a weekly high. So that's what we'll be looking at in our daily reports. Silver's in substantially the same position. Here's our silver weekly. The weekly momentums are bearish and not oversold. It means we should have another 1 to 3 weeks sideways to down. We completed an almost ideal 5-wave advance right into the typical end of wave 5 target zone. We've taken out some swing lows here. So more than likely, silver is going to continue sideways to down, reach around 50% retracement, which is just within ticks of this wave 4 low. So it's not a time to be buying. It's probably a time to be selling once we make the next daily momentum bear reversal. Again, the daily momentum is oversold, so we should be near a daily low, but any advance should be a correction within the weekly bull trend. I can take a couple of these things off. Excuse me, within the weekly bear trend. So if we do get pretty soon, we make a daily low, and then when we make the next daily momentum bear reversal, price will probably be below the January high, and that'll be a wave. We'll have completed an A, and that'll be a wave B of the correction, and an ideal time for a short position when we have both the daily and weekly momentums bearish. So that's what we'll be looking at in the days ahead. Let's take a look at the GDX. Well, this is the GDX, and the similar position for the XAU and other mining stock indexes and mining stocks themselves is the weekly momentum is bullish, but the fast line is overbought. So we're near a weekly high. So if by chance the GDX makes a new high, more than likely, the upside is limited to around 22.93, 23.45. That's these swing highs from back in April and July of last year. And everybody's going to be looking at those swing highs as resistance. And it's also the 100% alternate price projection of, I think it's this shorter swing that I've got in this section here. So again, we're probably going to make a new high, but the upside is going to be pretty limited. Here's the daily data, and like in gold and silver, the daily momentums are not just a dual look back oversold, but today, Thursday, they made a bull reversal. And this looks very much like a correction. So if that's the case, more than likely, the GDX is about to make a daily trend up, probably to a new high, but it'll probably be the last advance before a weekly high is complete. And then if we make a bear reversal in the daily momentums with price above the January high, it'll probably coincide with a weekly high as well. So we'll keep you up to date on that in our regular reports, but potentially, I'd even say probably a new high in the GDX and mining stocks, but pretty limited on the upside and real close to completing a weekly high. So be aware of that. Certainly if the GDX or mining stocks start making new highs, start trailing those stops pretty close to the market to lock in profits if you're on the long side. Well, this is a dollar monthly, and getting an idea what the probable long-term trend is for the dollar can be helpful for some other intermarket analysis, because so many other markets are affected by the value of the dollar. So here's the dollar monthly data, and nothing's changed on what we identify or I believe the monthly position is, and that is January 2017 completed a wave 3 high. So we're in the process of making a wave B, or excuse me, a wave 4, and it shouldn't be complete. And why is that? And this is an important piece of information as far as I'm concerned, because if a corrective low is not complete, that means we could have many months, if not a year or two, before the dollar resumes any sort of bull trend. So if we do a 100% alternate time projection of the wave 2, which was 26 months, a little over 2 years, from the January high, that gives us March 2019, next month. And so this decline into the February 2018 low should not be the end of a correction. And that means the dollar should be sideways to down and probably exceed the February 2018 low before a wave 4 correction is complete. And also, March 2019, the exact same month, is a 38% time retracement of this five-wave advance into the January high. And typically, a correction to a five-wave trend lasts at least a 38% time retracement of that trend. And so again, because the February 2018 low was made so much earlier than that time, it's probably not the end of a correction. It's probably just a wave A. And more than likely, a wave B is complete. We'll take a look at that in a minute. But if it's not, it's really close to being complete, near the 62% retracement here. And when it is complete, when we get some signals that it's complete, then we should be many months sideways to down to test or exceed the wave A low, just as we did back here in this ABC correction of wave 2 between 2009 and 2011. So that's pretty significant, knowing that more than likely we're going to test or exceed last year's low in the dollar sometime over the next, let's just say, 6 months to a year and a half, and that we've got quite a bit of time before we're going to have any real bull trend in the dollar. And that's significant and something to be aware of. Here's the dollar weekly data. And the weekly momentums are bullish. They've been really lackluster sort of bull trend in the momentum here the last few weeks since we made this bull reversal following the low in January. But we should be near a weekly high. So the question is that weekly high going to exceed what I got showing as a wave B high? Well, we'll address that situation in a minute. Well, we'll address it right now. It's more than likely no, we're not going to exceed that high. Certainly if we do, it's not going to be by much, or probably not going to be by much. But this high was right around the 62%, a few weeks after, 62% time retracement of the wave A. Typically, that 38 to 62% time retracement is where a wave B would be complete. So it's not too long after that. And so that kind of indicates that this little triple top in the weekly data has probably completed the wave B high. And we're going to be sideways to down for many months into the future. But we need a bear reversal in the weekly data or a trade below this low about 3 weeks ago to signal that or confirm that that wave B high is complete. So we'll be looking at that closely in the days and weeks ahead. Now here we are right up to date through Thursday, February 14th. And now is where we get into some significant position of the market. For the past week, we've identified today, Thursday, February 14th, as the probable maximum time before we complete a daily high. That's a high that lasts 3 to 5 days, followed by at least a 3 to 5 day corrective decline. So the question is it just a daily high, or is it potential a weekly high, and is this potentially the completion of an A, B, C correction? Well, as of today, we made a reversal day, and our daily momentums have already been dual look back bearish from a couple days ago. We're essentially sideways here over the last few days since we made that bear reversal. So we've probably completed a daily high near the 70, a little above the 78.6% retracement. And we'll see in the euro in a minute, which of course trades inversely to the dollar. It even has some stronger technical position as of today's reversal day. But we're looking at the daily here, and what would indicate that this is a corrective advance and not the beginning of a bull trend that's going to take us to a new high? Well, if we came down and if we close into the closing range of what I've got labeled a wave 1 or A, that's what we call closing overlap, and it's a pretty strong signal that this is a completed A, B, C correction and not the beginning of a bull trend to the new highs. So that's going to be a key in the days ahead. If we close below the January 24th close at 96.297, 297, more than likely we've just completed an ABC correction and the bear trend is going to continue. And that's significant because the next bear trend is probably not going to just be a weekly trend. It's going to last for many months and potentially decline to test or exceed last year's, the February 2018 low. So we're in a real significant potential turning point here with the dollar, very significant. Of course, we'll be following up on that in our regular reports to see if we confirm or invalidate this reversal that I believe very significant reversal that probably just happened today. This is the Euro weekly. Basically the same position. We do have a real clean low to low to low this week. And we're also right near the 100% alternate price projection if this is an A, B, and a C. We'll look at that in the daily chart in a minute. So more than likely, again, we've completed this wave B low. And right now, even though the the weekly momentums are bearish, we're in a significant time period this week to complete a weekly low and a corrective low. And here's the daily data for the euro. And again, today, as we've had on our charts here for the past week, very significant time period. It's the 100% alternate price projection of what's labeled a wave 1 or A from the wave 2 or B high. And it's also the low to low to low is the same day today. Boy, we get those two time factors falling on the same day and following on the week ending February 15th, which is a higher time frame low to low. That's a multiple time frame time factors to complete not just a daily low, but potentially a weekly low. And today's reversal in the euro was not as relatively weak as the dollar was strong. The euro is just a few pips above this parallel channel line, and also the 100% alternate price projection of the wave 1 or A. So this is 100% alternate time projection, 100% alternate price projection. Very significant time, and we did make this reversal day today. And if we close above, again, the January 24th close, which is just a little above the market, I think it's almost inevitable we do that. More than likely, this has completed a corrective ABC. And if we trade above what I got labeled as wave 4 high, it's just yesterday's high, probable wave 4, then that'll confirm at least this 5-wave decline is complete. And because that's well into the range of the wave 1 or A, again, more than likely, this is a completed ABC. That's really significant. So right now, as of the end of the day today, we're in an immediate position to formulate long trades for the euro, short trades for the dollar. That should last at a minimum a few days and probably several weeks. So this today is a key time period, a key technical position for the euro and the dollar to make reversals. I've just gone to the 240-minute data here on the euro, and it's just a really interesting position. I think anyway. And what position do we have here? I'm just going to get rid of the swing file that's on there. As of today, we got a pretty clean 1, 2, 3, 4, 5 into a new low as of the end of the day today. Now we got to trade above what's labeled a wave 4 high to confirm that 5-wave decline is complete. But because we're near the 100% alternate price projection, 100% alternate time projection. It also happens to be right on the median line of an Andrews medium channel. And that's fairly significant, especially when we tested it once. It's a little bit above it here. And that happens to coincide with the parallel support channel, almost precisely at today's low and right where the 100% alternate price projection is. So any continued decline in the euro should be really minimal before we complete this wave, probably wave C decline. And then again, trading above this wave 4 high, it not only indicates that this 5-wave decline is complete, it indicates that more than likely this higher time frame A, B, C is complete. So again, I'm looking for immediate setups to be long in the euro for a potential multi, not only multi-day but multi-week advance. Great setup in these markets. Well, this is crude weekly, and a couple weeks ago, we made probably completed a weekly high. We made dual look back weekly momentum bear reversals, but it was a 5-wave trend up, so it shouldn't be a completed correction. It should just be a wave 1 or a high. I'm going to take that question mark off because I believe we've completed that at the 38% price retracement and the 38% time retracement. And then we made a dual look back weekly momentum bear reversal. That would indicate we've probably got another 2 or 3 weeks sideways to down to complete a wave 2 or B low, but that's going to be the real setup when that's complete and we continue the bull trend to a new high, potentially significantly above the February high. So typically we'd have a wave 2 or B correction around 50% retracement or more. So ways to go on the downside before we finish that correction. And here's the daily data. And the daily data, let me get this straightened out a little bit here. There we go. Again, we've probably made a wave A correction. We're in the process of making a wave B, and the next daily momentum bear reversal will put the daily and weekly momentums in sync, bearish sync, to continue the weekly bear trend. And more than likely by Monday, no later than Monday, we should complete this next daily high. Monday is the 100% alternate time projection of this last 5-wave advance. From what I got labeled a wave A low. And tomorrow, Friday, is the 100% high to high to high. That's tomorrow. So again, we've got these 2 key time factors falling within 1 trading day of each other. So the immediate upside should be pretty limited before we complete a wave B high, and then we're sideways to down for another week or 2 at least before we complete a wave 2 or B correction. And the downside's probably limited to around the 50% correction. Might make it a little bit more, but the real setup's going to be following the next daily momentum bull reversal when we have a whole nother cycle in this, or when the weekly momentums make a bull reversal to continue the bullish trend to a new high. And we'll keep you alert to that in the days ahead. Well, that's it for today. If you liked what you learned in this part 2 of the long-term report, take a look at our DTU reports. Again, through this Sunday, February 17th only, we're adding a month for any new subscriber. You'll get 4 months for the price of 3. So you can get complete information on our reports at dynamictraders.com and the DTU reports tab. You get a wealth of materials. So if you got any interest, check it out. You get daily updates, you get weekly video updates, etc., etc. I sure appreciate you checking us out, and I hope that you join our DT community and I can be of service to you for many years to come. Take care.